Good morning. Okay, today's Wednesday. It's about right here, 7:18. So the market's been open about 40 minutes so far, and the market continues to go down. I'll show you a longer term chart, but these are 4-hour charts here. So the Russell's going down pretty good, and looks like the ES is continuing to go down. It's about 13 points down. The Nasdaq's about 110 points, and the Dow's plus 45 points. So it's pretty much just sitting there. And Russell's down about 19. So that's quite a bit, actually. So I'm going to show you on individual charts what this looks like. Okay, so this is the Russell. You can see the Russell, as we talked about before, when it came down here, pretty much stayed in this area. It didn't go up like all the other indexes, and this was my indication that the market was eventually going to stay in this downtrend. Although the markets were trending up, let's see, I'll show you what I'm talking about. So just for an example, the markets were trending up in this short trend here, while the Russell was kind of just hanging out in this area. It didn't move up like this did. When this moved up, the Russell moved up a little bit, but pretty much stayed at the bottom. So anyway, this right here, so this is the ES, and we put this Fibonacci in here before as far as how far this is going to retrace. And so the retracement would be, if this was a healthy market going up, then it probably wouldn't retrace any more than this 38%, and then it would bounce, and then it would keep going up. If it's not that strong, then it's going to start breaking below this line into here. Now again, this is not 100%. These lines are never 100%. There's other things to take in consideration, and one of them is trend, and the other one is retracement. So of course this market went all the way up to here, and now it's got to retrace. I would say this market has to at least retrace into this area before either popping back up or popping up a little bit and then coming down. Now it could come straight down. It's done that before, kind of like this. It's not too often that it does that. It's not common at all, in fact. But it could do that. Eventually, like I said, we have to look at trends. So this trend there's some momentum here pushing this thing up. Long-term momentum is pushing it down. But right now it's time for this market to, at the very minimum, retrace. And if it starts retracing, which it is, then that's a good sign if you've bought some put options in here. So these are all the things that we've talked about before. Just sitting, like I said, I had bought some put options here. So sitting on some positions here, and I dollar cost averaged all the way up with my put options. And so now I believe it's time for this market to turn around and come down to at least, eventually I believe it's going to break down, but it's just a matter of timing. So we'll see where the market's going right now. It's down about 8 points, and that's nothing. This market can wind up anywhere today, and I'm sure it's the momentum is building to start coming down. Okay, so once again, key factors are we're in an uptrend here, in the short-term uptrend, and that's what drove this market up. It continued that uptrend. It got too far extended without retracing. Markets always retrace. This one hasn't retraced yet, and now it's starting to do that. So it's doing whatever it's supposed to do. What the stock market does, it goes up, it goes down, and it retraces. And right now that's what it's doing, it's retracing. So once again, if this market stops retracing here and it continues up, then that's a healthy, that would be a retracement, but that would be a healthy uptrend to continue. If it doesn't and it keeps going down and breaks below this line, then pretty much it's broken that trend at least in the short term. These are things you have to watch out for. You have to pay attention to trend, like I said. So you'll have to decide where you're going to get out. If you did buy your put options here and it comes down here, that could be a good trade to get out. If you're in a longer term trend, trade, then of course if the market gets down to a certain point, eventually it's going to have to retrace at that point. So these are the points where you're going to have to decide to get out. And if you're day trading, then of course you're going to have to figure out where you're going to get in, which, this is pretty much a balance area here. Right there, the balance area. So if you do believe this market is going to continue down, then a good time to get into this market would be after it breaks through here. That would actually be ideal, because if the market goes back up here and then comes back down and then breaks out, then it's going to retrace like we talked about before. But since it's already at this bottom here, momentum's going down, and the market breaks down the second time, let's say past this, and we're only at 9 points, minus 9 points. This market can move 100 points in one day. Usually doesn't move that much. On average, it might move about 80 points or 60 points, but still, that's pretty good. Again, if you want to get in on the short, right below this, and that would be good. And then you kind of, if you buy options that are far enough out, and you think that eventually this market will go down in the next couple days or a week, and this market turns around and comes back into this balance area, then you can hang on to that position and then wait for it to hit again down. Now, if you buy an option that's expiring today, then that means you have to decide today what's going to happen. So if this market did come down, turn around, come back up here, and even poke around in here a little bit, and not see this bottom for today, then you're going to lose out. So I wouldn't buy anything that's going to expire today. I would buy it at least a week out. Even a month is good, because it's going to move dollar per dollar. It's going to move the same as one that you buy that's going to expire in a day. So why not have that extra insurance? Okay, market's starting to come down. So this is good. Looks like momentum is down. Looks like it's starting to build up some volatility here. Once it starts breaking that low right there, and then that would be a good day trade, which you could turn that into a longer term trade if you wanted to, if you buy options further out. And that's my plan. I like doing that. Okay, so back to the 4-hour chart. Looks like the market's going to start breaking down some new lows in here, and it's probably going to continue. Like I said, you have to play your game. You have to find out where you're going to get in and out. I got in here. Here's another position to get in, and you can write this down, and then you decide if you already made your couple $100 or $1,000, whatever. You just get out and you wait for another opportunity. Always opportunities. I would say at least one opportunity a day to get into this market and make some money. So you're not going to lose out. You don't want to go into FOMO, fear of losing out, fear of missing out. So because you can't miss out. There's too many opportunities. Okay, so that's the plan. Just to summarize this, if you're going to short this market in this is a 5-minute chart, and you're day trading, like I said, you don't have to day trade like everybody else where they're watching the ticks, everything's going really fast. You can treat this almost like a longer term trade. And like I said, this is a balance area, the same balance area that you see in longer term charts. Balance areas are balance areas. Doesn't matter if it's on a 5-minute chart or a longer term chart. As long as you know where you think this market's going to go, and if it's pretty heavy and it's starting to go down, it hasn't retraced yet, then it sounds like this would be a good trade going down in this area below here, and then you hang on to it. Like I said, again, if you buy longer term options, which I would do, maybe even a month out, but always buy at the money. I wouldn't buy anything that's out of the money. Now, if you don't have enough money, then you can do that, but you have to make sure that you're pretty sure on direction of this market, and it's going to do whatever it's going to do within a certain period of time before your option either expires or gets close to expiration. It doesn't even have to expire. It can get really close to expiration and still lose money if you're out of the money. So always try to buy at the money or in the money. Okay, so I'm going to get off of this. We're about done here. I'm going to position myself to buy some more put options as this thing starts going down in here, and then that's it. And then we'll check with you guys tomorrow.